Alright, family. Welcome back to another edition of Millennium News. Enjoy. Welcome back to another edition of Millennium News. Alright, we're gonna go ahead and get it started, family, with some news. Alright, but first of all, we're gonna go to kitco.com. We're gonna look at some of the market prices for metals, everything else. Alright, so look at the Dow market. The Dow futures are down right now, 650.19 points. The S&P 500 is down 64.42 points. The Nasdaq is down negative 189.35 points. Alright. Alright, you just got another update for it. Alright, so we go to European markets. Alright, the stocks 50 is down 93.61 points. The FTSE 100 is down 68.27 points, and the DAX is down 468.57 points. Alright, now we switch over to some Asian markets. Look at the Nikkei. The Nikkei is down 8.54 points. The Hang Seng is down 135.41 points. Alright, and the S&P SAX 200 is down 104.50. Alright, so we're going to take a look at some of these metals. Alright, in the world open market, alright, gold is asking price is $1,903.30 for unchanged. The price of silver jumped 21 cents to $24.56. Palladium is up $4 at 400 and asking price for $880 even. Palladium is up $14. Asking price is $2,407 and $2,407 even. All right, and rhodium is up. Rhodium is unchanged at about asking price $13,800 an ounce. All right. Look at the ratio, gold to ratios. Right now, the gold ratio to silver is, for every ounce of gold, 77.80 ounces. 77.80 ounces for 1 ounce for silver per 1 ounce of gold. All right. Platinum, for every gold ounce, 2.19 ounces of platinum to gold. All right. Palladium, 0.84. All right. So let's go ahead and get into some big news here. All right, but this news here, we're going to come from the past. All right, we're going all the way back to March. All right, this is relevant to today. All right, this is coming from the upshot via the NewYorkTimes.com. All right, Fed's message: the money printing presses are fired up and ready to go. All right, in actions Monday. This is going all the way back to March 23rd. All right, this is at the start of what we call the so-called coronavirus or COVID-19, whatever they want to call it. All right, in actions Monday, it will show and do anything to address a glaring shortage of dollars across the economy. All right, an extraordinary action, the Federal Reserve on Monday morning can be boiled down to two sentences. There is a rapidly developing shortage of dollars across the economy, and the Fed will do anything it needs to do on any scale imaginable to end this shortage. All right, its announcement was phrased in the dry bureaucracy typical of a statement from central banks, but it contains a powerful idea. The Fed, the one entity in the world with the power to create dollars out of thin air. No, don't read it again. The Fed, the one entity in the world with the power to create dollars out of thin air. That means it ain't backed by nothing. It's backed by whatever confidence they think the people may have in it. All right. So there's no backing of it. They just print it out of thin air. All right. Has every intention to doing so, whatever magnitude is necessary to try to reduce the severity and limit the duration of the coronavirus economic crisis. All right. It's really two distinct crises the Fed is trying to solve with overlapping tools. All right. So the money printing is ready to go. They've been doing whatever they can. But if you realize what's going on, this started back in September, and they ain't never turned it back off yet. All right. So they're just printing dollars everywhere, anywhere, and everywhere. This is why you've seen the value of your purchasing power go down. Prices are going up on all sorts of goods and services, but your purchasing power has not gone, has not even bothered to go up. All right, it is diminishing. All right. All right. All right, for the next story, we're going to go to John Williams, shadowstats.com. All right, we're going to take a look at some September numbers. All right. All right. September 2020 new home sales dropped in the month on the top of downside revisions, while existing home sales jumped in the month. Also on top of downside revisions. All right. All right. So you got that one. All right. It says existing home sales jumped also on top of a downside revision because these numbers are coming in. Whatever the media reports, they come back later on, and we always say they downsize. It revises the numbers downward. All right. New home sales. All right. In NHS, Census Bureau, existing home sales, EHS. All right, National Association of Realtors. All right, in context, it continues statistically unstable reporting. September 2020 home sales monthly activity dropped by negative 3.5%, down negative 1.5% net revision against a downwardly revised 3%, previously 4%. All right, net revisions against a downwardly revised 3.30. I read that one already. I'm sorry about that one. I'll read it again. Against a downwardly revised 3.3%, previously 4.8% gain in August. All right, with annual growth slowing to 32.1% from a downwardly revised for 40.8%. With annual growth slowing to we got myself all messed up. All right, in August, currently, NHS, National Association. New home sales remains slight shy and ever recovering its pre-existing recession peak by negative 31%. September 2020 existing home sales gained 9.4%. All right, in the month, up 20.1%. 20.1% year to year. All right. So what we're looking at here, family, these numbers are coming in. All these numbers are what they're going to be putting out in the media. They're going to be revised down. All right. Just give it time. When they put out these numbers at the end of the month or the beginning of the next month, they're going to be revised. They're coming out with the new revised numbers. They're coming down. All right. All right. And then we go to zerohedge.com for the final story, family. All right, this one is big. Creditors finally wake up to apocalyptic reality. Bond losses as high as 99%. All right. Back in March 2016, we published an article showing how the coming default cycle, when it finally hits, would be different. It would be marked by record low recovery rates. While there is many reasons that three stood out. The disconnect between fundamentals and asset prices, thanks to the Fed's constant manipulation of markets. There it is right here. The markets are rigged. All right. Don't believe me? You gonna look for yourself. The markets are rigged. All right. The record laying of debt upon debt. Much of it secured, and an ill 3 years of covenant life deals that stripped most, if not all, creditor protections over the past decade. All right, something which we noted and recently has resulted in bitter creditor fighting and a civil war involving some of the most prominent names in investing. All right, fast forward to today, Bloomberg picks up what we said almost 5 years ago. All right, see, if you get your news from the mainstream media, or the lamestream, as most of us like to call it, you're behind. All right, goes back to the old saying: if you don't read the newspaper, you're not informed. If you read the newspaper, you're misinformed. All right, follow the mainstream media, you'll be behind. All right, all right, all right. Fast forward. I'll read it again. Fast forward today, when Bloomberg picks on what we said 5 years ago in a bond defaults delivered 99% losses in new era of U.S. bankruptcies, writing that more and more bondholders are fighting over recoveries as low as 1%, as 1 cent. Oh my man. The story should be familiar, as we have discussed constantly in recent months in a post-COVID world. All right. They were already talking about a post-COVID world. All right. How did they know it's about to come to an end? All right. Think about that. All right. Where bankruptcy filings are surging, many lenders are coming to the realization that their claims are almost completely worthless, just as we warned would happen in 2016. Instead of recouping, say, 40 cents of every dollar owed, it has been the norm for years. Unsecured creditors now face the unbelievable prospect of walking away with just pennies of that. All right. Several stark examples of this economic collapse and recovery in the current price of a handful of retailer bonds. All right, Men's Warehouse, which filed in August, traded this month for less than 2 cents on the dollar. When J.C. Penney company went bankrupt, an auction held for holders of default protection found the retailer's lowest price debt was worth just 0.125 cents on the dollar. All right. For Neiman Marcus, that figure was 3 cents. Indeed, as follow charts of the median CDS auctions finds record low recoveries of bondholders, which of course is a great news for all those who bought the CDS. All right. All right. So, family, we see things are accelerating. We see things about to go on. We got the Fed, we got the Federal Reserve printing money. The printing presses are open. They're just printing money out of thin air. It's backed by nothing. All right. Creditors are waking up. All right. We got September numbers in. All right. All right. So, with that being said, you know what time it is. It's coming soon. We're in a global currency reset where the dollar will be phased out as the world's reserve currency and will be a domestic dollar. Your purchasing power with the U.S. dollar has already dropped almost 99%, and they're going to drop even further. All right? Thank you for joining the Dish Melanie Got Me News. All right, family. Become your own banker. Become your own savings and loans. Become your own credit union. And foremost, pay yourself first. All right, say again, pay yourself first. All right? Thank you for joining us. All right? Protect yourself out here and be safe. Let's get it started.